Joining me now to discuss is 3Fourteen's Warren Pies. And Warren, great to have you here. I mean, the market is acting as if it's a bit of a green light for risk and for cyclicals and for kind of leveraged plays and things like that. Do you buy into that conclusion, or is this a fade?
Well, look, our price target on the S&P out to year end is 6,800. We've been more or less risk on through from May. And it's hard to fade. I think Powell gave the market exactly what it wants. So if the market stumbles from here, I don't think it's going to be about the Fed. It'll be more about the economy and growth and some of the other technical factors. But yeah, this is incrementally positive. I think Powell was more dovish than we expected, but this is what the market wanted.
Yeah, and what the market wants, just to maybe expand on that a little bit, has been, it seems, this rate cut on the way, and also for the rate cut not really to be medicine because the economy's still okay. I mean, you think there is more genuine downside risks in terms of growth in the labor market and things like that from here?
Yeah, I do. I think there's a real debate going on in the market. That's one of the things we highlighted yesterday in our note to clients, is that there are really two strong camps and a dichotomy in views that I don't recall very often in my career, where one side thinks that inflation is this massive risk and the other side thinks that the labor market is. We're much more in the disinflationist or labor market growth concern camp. We think there's multiple cuts still coming this year. And when you dig into the labor market, it is weakening. I think just like the influx of immigration last year obscured, it pushed the unemployment rate higher, and we call that a benign loosening. The immigration crackdown has really contracted labor supply. But when you look at hiring rates, firing rates, wages, job switchers versus job stayers, residential construction employment, I do think there's some that the labor market is in a real stasis. It's real stagnant here, and one move in the wrong direction, you could be talking about a significantly higher unemployment rate. So, yeah, I think that's a valid concern.
Yeah, and obviously I think the market is kind of applauding the fact that Powell was not using the low stated unemployment rate as somehow cover to stay a little more hawkish and work against the idea of a cut from here. We've been dealing for 8 days since the S&P was last at an all-time high around these levels with this idea that we were having this rotation out of the big leaders, this momentum reversal, a little bit of a reallocation toward laggards, and maybe the market was trying to kind of get away with just using rotation to get away from an overbought condition. Where does that leave us right now in terms of the parts of the market that look better and worse positioned?
Yeah, I think that the broadening, everyone wants to believe in it. And it's been the mega caps have consistently dragged the broader market along for this bull market really for years. And so this is a deja vu, this conversation a little bit that we've all been having. My look at it, even though we're constructive on the equity market out through year end, I just think that September through October is a tough time for markets. If you study history, it's about 50% greater risk during that period of the year for like a 7% pullback. And so, yeah, I think this is a good day. I think this is a bit of a relief rally after 5 straight down days in the market. And we want to believe in this broadening, but one rate cut's not going to do it. Like, the Fed's going to have to kind of capitulate and signal and kind of codify all the other ones. So I think there are more cards to flip over, and there is probably a little more even data dependence in the Fed's path going forward than the price action today suggests. So, I'm kind of cautious when we go into September and October. I think that's sentiment's pretty stretched. Positioning's dried up. Corporates aren't buying. And, I'm a little cautious. I'm not totally buying this move today in the near term.